really the challenges that we're seeing with property is policy decisions. It's not, anything to do with fiscal. It's not anything to do with investment markets or anything like that. It's ultimately come down to legislation and rules that have been put in place.
Yeah. And
welcome to 360 Money Matters, where financial planners Billy and Andrew talk all things financial planning. This podcast aims to increase your knowledge and confidence with all things money. Each week, they will cover topics such as investing, cash flow, budgeting, saving, passive income, debt management, and much more, so you can live a life on your terms without limits.
hello and welcome back to another episode of the 360 Money Matters podcast. I'm Billy and I'm joined by my co-host,
Andrew. Bills, here we are, another Friday, another 360 Money Matters podcast. Sorry, Friday for us, and Wednesday for all our listeners.
Another Friday, yes, it's coming over the airways on a Wednesday to everybody. Andrew, what are we talking to everyone about today?
I think we're talking to everyone about what's maybe Victorians, I don't know if it's Victorians or Australians' favourite topic. We're talking about property. We love it. Everyone loves it. And it is so topical. But yeah, property is the general thing that we're talking about. But specifically, we're talking about Victorian property market. We're talking about what we're seeing with some of our clients at the moment is there is a lot of conversation around, hey, do I continue and is it worthwhile still holding property in Victoria? Do I sell? Do I invest? There's hasn't been a question mark on Victorian property for a very long time.
Like there is now.
Yeah, there is now. And so we're just going to do a bit of a deeper dive around that and look at some of the pros, some of the cons, and really what's causing everyone to have, the level of anxiety that hasn't been present before around Victorian property.
And what's caused it. And that's why I was smiling, because it's going to be a good opportunity to beat up the government.
Absolutely. Nothing more than we love to beat up the government. Or the ATO. I mean, either one.
This is true. One and the same anyway. But in saying this, I was going to say property, at least in Victoria anyway, is our national sport. But this is going to be coming out during finals, right? Or this is recording at finals time, AFL. So, it may be competing as the national sport with AFL at that point in time. But anyway, so let's talk about what's been happening. I mean, look, this is probably more so relevant for Victoria in particular. So keeping that in mind for all of our viewers and our listeners who aren't necessarily in Victoria. But I guess what we've seen here in comparison to other states has left us as Victorians sort of scratching our head going, okay, what do we do? Right? So let's just go back. Let's just run through some data. So we've pulled out some data from CoreLogic. So this is 30 years, but up until 2022. Okay. The growth rate per annum of properties in Melbourne, and this is not only just including the growth itself, but this is plus the rental yield.
This is not including the rental yield.
Not including the rental yield. Okay, not including the rental yield, 5.9% per annum each and every year over that 30-year time frame.
Yeah, which is amazing. I mean, it's a great growth story. Circa 6%. I mean, you're talking about. People talk about, property doubling every 10 years. Maybe that's every 11 or 12 years. But it's a massive growth rate of property. And it doesn't include the rental income that you get off the back end of it as well. So if you're talking about, 5.9% growth plus maybe a, 2 or 3% rental income, you're talking about some pretty significant numbers that you can compare it to, the share market, both domestically or internationally, and it doesn't necessarily overperform the share market when you're looking at it in growth statistics. But what it's done is delivered some pretty consistent growth. And I think that's really the thing that, people, or really why people have some affinity to property is, you're not getting the same level of fluctuation as what you're getting in another market. And even if you are, you're just not seeing it. Yeah. Because you're looking at it from one data point to another data point. You're not actually seeing the fluctuations that, if I listed my property for sale today versus tomorrow, I'm going to get a very different price. But you're not actually seeing that price because it's not getting valued every single day.
I think just zooming in on that for a second and sort of digressing for a minute. But if you think about from a properties perspective, most of the time you're leveraging in order to get into it.
Yeah.
So you're spending a lot more money. So when you apply those rates of return on that type of investment, you're talking generally on a larger pool of money or a larger asset value. The fact that it's not that liquid definitely helps. So that tends to lead towards a longer term investment time frame. And the fact that we understand it and people need somewhere to live. We understand what property is. It's physical, it's tangible, you can touch it, you can feel it. I tend to think that definitely helps as well too. And above and beyond all of that, I think the fact that there's no daily price for that particular asset, the only way to really test the market is to test the market and get it on the market and sell it.
Yeah.
That's it.
Yeah. And even if it's, getting an appraisal to get an idea, I mean, you're not getting an appraisal once a month. You're not even getting it, once every 6 months most of the time. Most people aren't appraising their property, for at least, max once a year. Most people, every few years. So realistically, if you did the same thing with an investment in, say, the share market, and you closed your eyes, didn't look at what happened and looked at it, in 12 months' time, you'd probably feel a lot more comfortable with it than, looking at the daily fluctuations. But that paints the story around, property, why it's been such a popular asset class. And also just to throw in there as well, yes, the entry costs are higher, but with property, you're funding up 20% of the money in most instances. And then the rest of the 80% is coming from the bank. So in terms of absolute numbers, if you can magnify the, 8% returns and 80% of it isn't even, 6% returns and 80% of it isn't even with your own money, it makes a very, very strong asset to be able to grow wealth. But why are people all of a sudden having some concerns and some fear around the property market, and why are we getting so many inquiries around potentially do we look at selling it?
Yeah, I mean, look, there's the cash flow piece, which we'll talk about. But even before we get into that, I think it's interesting to point out what we've seen in the Melbourne market. I mean, we've seen we're calling it a short-term decline, 4.4% off its peak. Now, what's interesting about that is when you look at other markets, and we might just talk about the east coast of Australia for a sec, but it's always been in terms of price of houses and even to a certain extent growth. Sydney, Melbourne, Brisbane.
Yep.
Now, Melbourne's fallen out of that and Brisbane's up there now. So we're starting to see that when you look at the characteristics, and going back to that 30-year, statistic and rate of return that we were talking about before, Melbourne's dropping off there. And I think it could be some of the other stuff that we're going to talk about, maybe some policy position and decisions from the government. But realistically, the Melbourne market, at least in the short term that we're looking at, has not performed as well as the other capital cities.
Yep.
And we're looking at this, scratching our head going, this doesn't make sense. Completely doesn't make sense if you talk about the type of and the amount of immigration that we're getting, the amount of projects that we've got going on in terms of government spending.
And the average income in Victoria versus other states.
From a cash flow perspective, maybe, we'll talk about those in a sec. Maybe that's the reason why. Not necessarily that people don't have the ability to hold the properties, but I think maybe confidence has been shook a little bit. And once again, I think that comes down to just a couple of bad policy decisions by the government and trying to recover some of the money that they spent during COVID. Yep. And where do you go to try and fill up those coffers? You tap the property market.
Yeah, exactly.
Andrew, run us through what are some of those things that we're talking about?
Yeah, so look, I think the biggest and easiest one to explain is mortgages. I mean, when you're paying a 2% interest on $1 million mortgage, your holding cost might be 20 grand a year. If that's up at 6%, you're paying 60 grand a year, 3 times the amount to be able to hold the property. So mortgage expense, we all know interest rates have gone up. There's talk of interest rates potentially coming down in the future, but that's probably still a little while away. And even if it is, we're not expecting, I don't think anyone's expecting interest rates going back down to 2%. So, your mortgage expense is definitely one. But really, I mean, we're talking, other smaller things like your, gas and electricity checks that you need to do on a property every single year, the requirements around standards for rental properties and what that needs to be. So there's pressure with maintaining property to a certain standard and the costs associated with that. And I kind of feel like, and I don't want to downplay it because it's not a straw that's broken the camel's back. It's probably more like a log that's broken the camel's back, is the changes that have now subsequently happened to land tax as well.
Yeah.
Almost, I think, 50,000 is the minimum
It's every
land value. So
It's every property.
you're talking every single property is paying land tax now, where, previously there were a bunch of properties in apartments and units that weren't exposed to land tax. But even so, the cost of land tax has significantly increased in order to recover the COVID debt. And call me a cynic, but I know that they're saying it's a 10-year recovery plan and then it's all going to go backwards and all of that stuff. I can't think of one moment in time that the government has reversed the tax that they've put on after they've funded expenses. So for all intents and purposes, I'm assuming that this is here to stay. So you're looking at costs associated with holding investment properties, and the burden that's associated with it is just so much higher than what it was a short while ago. I mean, we're talking a couple of years ago where none of this stuff was even a consideration. 2 years is not a very long time. And so that is ultimately going to put a pressure on prices.
Andrew, I'm just really happy that it's you beating up on the government. That's not me, because normally it's me having a crack here. But look, just to add a little bit to that, I think you're absolutely right in terms of the land tax. Call it the land tax levy, this temporary 10-year thing, if you can call 10 years temporary. I don't think it's going to. I think you're right. I don't think it's going to go anywhere. But
wasn't the toll road that we were meant to be paying, once the debt's paid on that, then you're no longer going to be paying tolls? I'm pretty sure that's what it was. And now all of a sudden we're still paying tolls. But yeah.
Yeah, nah.
Isn't that the most Aussie thing that you can say? Yeah, nah.
Yeah, nah. That's probably the best way to sum it up. But look, going back, in terms of what happened in Victoria, Melbourne in particular, with COVID lockdowns, the government support that was put in place in order to ensure that people were still receiving an income, that has to have an impact. And this is what we're starting to see, because governments are scrambling, no doubt. Governments are scrambling about how do they balance their books and how do they try and repair the money and the damage that was done. And Victoria, unfortunately, copped it the most.
And so Victoria is bearing the cost of government failings, is ultimately
Victorians, absolutely. Yeah. Well, Dan Andrews has gone and retired, taken a pension, and probably getting a cushy job landed somewhere. So
And I think that's probably a big key takeaway in all of this is we're talking about policy decisions that are impacting the property market. We're not talking about investment fundamentals. We're not talking about anything that's ultimately happening with the market. And sure, there's probably an element of that, which we'll touch on, around sort of the cash flow pressures that sit outside of just the property market in itself that's impacting the property market. But really, the challenges that we're seeing with property is policy decisions. It's not, anything to do with fiscal. It's not anything to do with investment markets or anything like that. It's ultimately come down to legislation and rules that have been put in place.
Yeah, and look, talking on the cash flow thing, I mean, if you've got the cash flow to be able to support it, I think that's one thing, and that's definitely the case. So we'll talk to that in a sec. If you don't have the cash flow to support it, then what are the options, right? Maybe you can support it for a short period of time and then you need to sell. Maybe you need to do something else, whatever it is. But if you don't have the cash flow and you're receiving all of these additional expenses through land tax, higher interest rates, higher cost of living that's impacting your, your surplus that you've got at home, then you're going to be forced to sell the property. So that's pretty straightforward. There's some other bits and pieces that you can do. But what I really wanted to highlight is if you're in a position that you could hold, and this is why I said before that it comes down to confidence. I think the question that we've been asked by clients when they ask us this question, should we sell? I think it's actually a question of confidence. So what I mean by that is if you're confident that this is short-term in nature, and we're going to go back to those long-term growth rates that we're used to seeing in Victoria, then you turn around and say, yes, I'm prepared to wear the higher expenses because I'm still confident that the market is going to go back to what it was. Whereas people are looking at this now going, okay, yes, I can hang on from a cash flow perspective. That's great. But I'm not confident. And this is driven by that short-term dip that we've seen. Well, the recent dip, we should call it. And going, okay, I'm not necessarily as confident as I once was. Do I hold it or do I not?
Yeah.
And I think that's what we're actually seeing in this instance right at the moment with the inquiries that we're getting.
Yeah. And even some of the underlying questions underneath this are also, do I buy in Victoria? Is Victoria, I mean, I'm thinking about the number plate. Is Victoria the place to be? Or do you look at property investment that sits outside of Victoria? Do you look at, if you're living in Melbourne or living in Victoria, do you look at still holding a property in Brisbane or another asset or another state that's growing while Victoria is shrinking in terms of the property market? So look, some of the considerations in that is, and this is not just in this scenario, but probably in any scenario, is, are you overreacting to a short-term pain? Is really a big thing to it. Is, okay, if all of these additional costs and everything was happening and the property market was still increasing by, 6% a year or, even more in some years, would you then be looking at it and saying, it's costing me more, it's having a bit more of an impact on cash flow, but that's okay, it's a bit of short-term pain. I'm able and willing to weather it because I'm getting capital growth on the flip side of it, and so it's fine. If that's the case, there's a pretty strong argument for property growth in Victoria.
Yeah.
Construction costs are increasing. The cost of borrowing are increasing. So you're not seeing the level of construction that you would ordinarily see or that you're expecting. Population growth is significant, to say the very least, in Victoria.
Yeah.
And so there's going to be a demand for housing. Now, that may not necessarily have an instant or an immediate impact on prices, because a lot of population growth when it comes through immigration goes into the rental market. But when you see stronger rental yields, you also see, stronger borrowing capacity or stronger appetite for investment properties to then push the property market up. And a lot of these immigrants that come into the country may be renters initially and then become property owners in 2, 3, 4, 5 years' time as well. And so you do see that start to play into the picture of, hey, we're expecting population growth and the supply is definitely not going to be keeping in line with it. So it could be a really fantastic buying opportunity to be purchasing property in Victoria.
Yeah, I mean, look, my own personal opinion, I just think that the market is in a reversion to the mean. So I just think it's distorted at the moment. Victoria's taken a bit of a hit because of the policy changes. Everybody else is experiencing all of those other factors that we had spoken about all over the place. Talking about Brisbane versus Melbourne, you've obviously got the difference between the weather, employment opportunities and bits and pieces. But I tend to think that Victoria has had a lot to offer and still does have a lot to offer. And I actually think this is temporary. So for those people that are in a position that can hold it, I think Victoria coming back and you seeing that what I was referring to before about Sydney, Melbourne, Brisbane, I actually think that that's where we're going to end up.
Yeah.
I just think it's a temporary blip. So, obviously those people that can't afford to hold it, I mean, that's an issue with affordability as opposed to forward-looking and confidence. But yeah, I definitely think that we could see Victoria start to come back. And there's a bit of talk about that in the media and with some commentary as well too.
Yeah, I mean, look, sometimes the catalyst for a change in direction doesn't really require that much. Yeah. I mean, even when you talk about all of the stuff that's happened, it's the only significant change that I can see between Victoria and the rest of the housing market is the policy changes around rental standards and the policy changes around land tax. Yeah. Now, that in itself is not a hugely significant thing when you're talking about, the massive change in mortgage expense that the rest of the country had experienced, and they're still seeing property prices increase fairly substantially. So the turning point around confidence and where you could see property prices moving quite quickly may not necessarily need that much other than a spark to ignite the fuel. And so very likely, or a potential scenario, is interest rates coming down and that not necessarily making property more affordable, but just being the spark for confidence. And all of a sudden, you've got this fear of missing out mentality that isn't present in the market at the moment. I mean, you go to auctions at the moment, no one's bidding, everyone's very tentative, you're not really seeing many bidders. You go to auctions when there's a bit more confidence and all of a sudden you fear of missing out and I need to get in now because next week, next month, I'm going to be paying more. And you could see things snowball move quite quickly. I think the big key takeaway in all of this is this might be the perfect storm for a buying opportunity, provided, and this is the very, very big, the very big caveat to this, provided it falls into your long-term strategic plan. This is not a, let's get into it, make a quick win, sell off in a year's time, and we're all going to become millionaires. This is, if it fits into your long-term plan, you haven't necessarily had a really good opportunity to purchase property at a discount in Victoria, and you definitely have an opportunity to buy it at a discount now. The question is, at what point in time are we likely to see that, come into play in terms of growth? And if you've got the long-term time horizon and it's, 10 years away before you need to sell the property or more, then you're talking about, okay, well, whether it goes up in a year or in 2 years, I've got that time frame there.
Yeah, I think coming back to, you're absolutely right. I think we're looking at a great buying opportunity here. And if you think back to the fundamentals of what drives property prices, and you go back to scarcity of land, supply and demand, and then you think about what is it that attracts people to a city, it's usually employment opportunities, and then out of that, it's all of the other lifestyle factors and things. So Victoria continues to tick all of those boxes. Reversion to the mean is what I keep coming back to. In the future, land is going to be more scarce and more valuable because there's more people wanting to move in. We're constantly seeing greater and greater higher density style of living. So land component, as a natural consequence, there's more people, wanting to move sort of not necessarily closer and closer into the city, but want to be close enough to amenities and lifestyles and bits and pieces. So I tend to think you're right. I think this is a great buying opportunity. And in terms of what's that spark and what's that catalyst, I think you're absolutely right that it's the interest rate lever, which we're starting to, depending on which economist that you listen to, hopefully we're starting to hear the rhetoric of the Reserve Bank change in September. They're holding back, which obviously makes sense because they don't want people to celebrate too quickly. But what the RBA is saying and how the consensus from an economics perspective, they're pretty much ignoring that, saying, we're looking through that because we know that rates are going to come down. It's only a matter of when. So I think, the more bullish ones are coming out and saying it has to be immediate. Whereas in terms of what the consensus is saying is early 2025. So if that's the case, maybe that's the catalyst, maybe that's the spark that brings the confidence back, that people say, hey, it was a short-term blip and now it's time to get back in.
Yeah, absolutely. Love that one, Bills. Love talking about the property market. It's always interesting and it's always something that a lot of people have interest in. So hopefully our listeners and our viewers got some value out of that one. And if you do want to get any more information, Billy's details, my details are both in the show notes. And subscribe. We look forward to catching you on the next podcast.
Thanks.
Thanks for listening today. If you have any questions on what we talked about or would like to have a chat about your money journey, visit us at 360fs.com.au.
Just a reminder to our listeners that the information contained in this podcast is general in nature and is not intended as personal recommendations for the audience. Please consider whether the information suits your circumstances before acting on it. This information is provided by Billy Amaridis and Andrew Nicolou of 360 Financial Strategists Proprietary Limited, authorised representatives and credit representatives of AMP Financial Planning.